Hello to everyone, my name is Gregor and welcome to a new video surfing the Elliott waves where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the dollar index, S&P 500, DAX, Kiwi, gold and even dollar yen. Now firstly, if we take a look on dollar index, as you know, we are seeing a strong move to the downside. We are seeing prices breaking this trend line support and now the price is approaching 100 level. So it appears that this correction that we have been tracking over the last few months is now finally confirmed as over because we are trading at new lows of this year. So apparently we should be aware of even more weakness. Now there's still a chance that we are either in this higher degree wave 3 if we consider that maybe this has been a flat correction for a wave 2 and now you are tracking higher degree 5 subways within this wave 3, or maybe we are here still coming out of a triangle and we will see a completion of this higher degree 5 wave drop still somewhere below 100. So no matter how I look at this structure, we are currently bearish and I'm aware of much more weakness going forward. So the reason obviously for this massive breakdown is the US CPI figures reported yesterday, which came out at 3%, better than forecasted 3.1. More importantly, it came down from 4% from the previous month. So apparently inflation is coming to the downside. Closer we are getting with inflation figures to 2%, there is a greater chance that Fed is closer to end its hawkish cycle. So maybe there are not going to be two hikes, but maybe only one hike, okay, this year. So because speculators think that we are closer to end this hiking cycle, that's why we are seeing dollar selling off, coming down with the US yields. So on the opposite side of that, as you know, what they say, if you have dollar direction right, you may have everything right. So that's why we are seeing other markets moving significantly higher. Now here is the overlay chart. Now I will go back to yesterday timing release of the US CPI, and you can see that Kiwi here, which is in green, is one of the strongest, is up almost 3%, 2.7 to be more specific. And on the downside, you still have crude oil doing very well, euro, gold is up more than 1%, and you also have this cat, which has been quite strong lately, is also up 0.5%. So Japanese yen is making some very nice comeback. So apparently we are in risk on flows, while the dollar index, which is here at the bottom, and the US yields, which is here in the middle, are trading to the downside. Now cryptos surprisingly were also moving to the downside recently, but now it looks like that they are trying to make some back. So I think that still cryptos could do very well if risk on moves will resume. Now, looking at the Kiwi, since we said that Kiwi is one of the strongest, as you know, we shared Kiwi in our past video analysis, and we noted a very nice recovery here. We are seeing prices breaking this trend line after 3 waves down. So apparently this 3-wave drop is now finished and we should see a new 5-wave cycle. So I still think that at some point we will retest this earlier high of 2023. So watch out for more upside. And looking at the 4-hour time recovery, let's say a higher degree 3-wave rise away from these 2023 lows, well, even if that would be wave C up from that point, you still need 5 waves up, right? And if you look closely, that's not a 5-wave movement yet. So we should clearly be aware of more upside. I think that in the near term we could retest this level at 63.84, but be aware of these pullbacks, of course. Maybe this trend line here, by the way, that's a base channel of a minor ongoing bullish impulse that is unfolding currently in black wave 3. So if we see pullback, let's say from here or from slightly higher prices, I think that this trend line could react as a very nice support because it was broken here decisively. And normally when that happens, it confirms the fact that we are in a bullish impulsive sequence. Now, gold is also doing very well. Finally, it's coming to the upside. I have been talking about reversal on gold simply because we had these 5 waves down. More importantly, that was a triangle and that was an ending diagonal out of a triangle. So this reversal that we are seeing right now, it's was expected, and so far obviously still in 3 waves, but I believe that we could see much more upside because US yields are now finally coming to the downside, and US dollar has more downside potential. So I think that gold could stay in uptrend, especially because also Chinese yuan has made a very nice reversal recently. So if we focus or maybe make a closer look here on the hourly time frame, you can see that I'm tracking this ongoing impulse targeting this head and shoulders target around 1976. So that was the measurement from the head to the neckline, and projected from a breakout point, I came out with this target 1976 or around there. So I think that this current impulsive price action that we are observing could continue towards these levels, and then you have also these swing highs going back from end of May, start of June. So this is definitely very important levels here up there, which could come in play while the market is holding this 1940. Okay. Also, as I mentioned, Chinese yuan is coming higher, so we are seeing some of the reversals, and we've been warning about this potential reversal because we are still looking at a 3-wave rally that stopped at the 78.6%. More importantly, we are breaking this trend line. So you can see when this market is coming to the downside, you can see that gold, Aussie, and Kiwi found the support. Okay, so before that we already had very strong Kiwi, for example, but now when these markets are turning around with the Chinese yuan in strength, I think that obviously that's why Kiwi is very strong, and this has been the case even when other assets have seen a pullback. Kiwi was able to hold a very good support, and I think that that's since China announced that they are in talks with New Zealand regarding their economic activity. So I still think that there is now room for more downside here on dollar versus Chinese yuan. So on the opposite side of that, if Chinese yuan will strengthen, we can assume that gold, Aussie, and Kiwi will do well. Now let's take a look on German DAX. Now German DAX has a very clear pattern here. I mean, sometimes when I'm looking at the markets, it's not always important what are the substructures here before or ahead of that pullback that we are seeing. Just keep in mind that important is that market is in uptrend, okay, because you have higher highs, higher swing lows. So that's an uptrend. We also recently spiked here to new all-time highs. So always when you see market in uptrend and then on smaller time frame you see only 3-wave setback like here, well, that's important indication that we should stay bullish here. Okay, more importantly, notice that wave C equals to wave A right at this level here at 15,500, around there, from where we have seen a very nice reversal to the upside. So because this trend line support held, we can easily say that this was a corrective channel. More importantly, we are already breaking the upper line here. So I think that more upside will be seen after the next pullback. Maybe even this broken trend line can at some point react or turn into very nice support. So I think that stocks are here in uptrend and that we have more room to gains here. Okay, now let's take a look also on the S&P 500. So the S&P 500 also is in a recovery mode. If you look closely here, I think that we could be in the middle of a wave 3. Maybe some resistance levels could be seen here, this sum around 4,600. But nonetheless, next pullback, in my opinion, will be corrective within uptrend. So we will continue to observe more price further gains here. Now, even if this rise from that lows here, swing lows, that goes back to March of this year, is only temporary, I still think it's impulsive, right? So you should see 5 waves up. So that's still for now. If I draw for you this line once again, you can see only 3 waves up. So watch out for more gains after a pullback. Looking at the 4-hour time frame, Recently we have seen a very nice break higher after this hidden divergence here. Notice that RSI has printed a new low here, but not on the price. So this was a triangle in a wave 4 that we've been also tracking recently, and so far we are seeing a very nice break to the upside. Maybe even some kind of a wedge here is another alternate scenario for a wave 5, but the idea is here that we can count 5 waves up from that point, okay, from start of May. So because of that, just be aware that there can be some slowdown here for a new wave 4 before market may resume higher. Okay, so of course we are bullish on stocks, but just be aware there can be some pullbacks before there may be a new opportunities on the long side. Okay, the support obviously here will be at former wave 4, while the invalidation level is should be somewhere here around 42.40. So as long we are above that level this, okay, I think that these stocks will stay in uptrend. And now finally, let's take a look on dollar yen. So dollar yen, or maybe better to start with Japanese yen, where it is, here it is. Okay, you can see a very nice pullback here. Okay, clearly in 3 waves with 5 subwaves within a wave C, very nice bounce from that support so far. And notice that COT data, which is here, also showed extreme positioning from large speculators. Okay, it's been the case here that goes back to 2021, when markets slowed down. Then even here 2022 we have seen a slowdown of a bearish move and then some kind of a rally, and then a massive reversal here occurred in 2022. So each time when market has seen these extremes, we're seeing a reversal. And you can see that recently another extreme levels of positioning of large speculators here in green has been visible clearly on this chart. So I was looking for potential reversal higher, and so far we are seeing very nice move to the upside here on Japanese yen futures. So we are breaking this trend line, and again, if you're familiar with Elliott wave principle, then you know that impulses are very sharp. Okay, so this is clearly a very sharp move. So even again, if that would be a temporary recovery, it should be made or structured by 3 waves. So that's the first leg. Then you would expect wave B pullback and then wave C to the upside from a minimum perspective. But ideally, based on what has unfolded here away from that 2022 lows, I think that this rise could even become in 5 waves rather than only remain in 3 waves. So I think that more upside for Japanese yen is coming, and that equals to more weakness on dollar yen. If you look closely here, we are seeing a massive break to the downside. More importantly, that's an impulsive reaction all the way back to the former wave 4. And normally when this happens, it means that most likely the top has formed here. Even maybe some kind of a head and shoulders formation is possible if this current support around 139 will hold. In such case, the resistance would be around 141. Okay, so watch out for more weakness here on the dollar yen, and I think that there can be even some kind of short opportunities in during this summer. But of course, if you're not on the short side yet, maybe it's better to wait on pullbacks. Okay, viewers, thank you very much for your attention. I hope that you enjoyed this video, and we will bring you a new update next week. Bye.